right, what's up, my friends? The week of April 8th, and we are back with another episode of WESPN. And Scotty, we're standing today, so you know what that means. It means it's business time.
Business.
Market
Yes,
updates, little interest rate update. But first, we got to get into not a sponsor this week, actually, just a show of support for Woody's Hoodies and this initiative that Carson and his father have put on. I'm absolutely obsessed with. I can't get enough of it. So proud to wear this hoodie. You know, this was established during the pandemic in 2020 by him and his dad, and it's just a cherished connection for them. They were gifted to teammates when he played for the Marlboros and then the LaSalle Vipers, and of course now Carson plays for our beloved Windsor Spitfires. What I love most about these is it's comfort for a cause. So 24% of all Woody's hoodie sales go towards collaborative cancer research endeavors, and it stays in the Windsor, Essex area. 24, a little nod to his number. And, my favorite part about this is it says wear your heart on your sleeve here. This logo here, nice, beautiful ribbon. Half of it for lung cancer, the other half for ovarian cancer. Both cancers that, touch that family a little bit too close. And, my story, cancer touched my family, obviously, very, very close, and so proud to support and give back. And so happy that the proceeds stay here in Windsor, Essex. So shout out to Woody's hoodies, and boy, they're pretty comfortable too, no?
Comfortable, stylish, and high quality.
There you go.
And a good cause.
And they feel absolutely fantastic. So once again, so proud to support Woody's hoodies. woodyshoodies.ca. Go grab yours and come on this great initiative and show your support. Really, really, really good cause. And Carson even came into the office twice and dropped our hoodies off. And so shout out to Carson, shout out to his dad, and a great cause once again.
Love it. Yeah, they even sized us up. I guess they were all out of XLs, so I had to get this medium. So
I'm rocking the XL. We're gonna get down to a large though by the end of the year. That's I need some accountability on that, but we'll get there. That's a different episode. Eclipse, man. Wow, man. What a day.
A lot of hype.
What a day. First things first, our mail out with the Eclipse was absolutely fire.
Was that our best one yet?
Yes.
I think so too. The best response we've gotten so far was from those glasses.
100%.
The DMs were actually flooded. Sometimes we say that and it's not true, but this time it was true.
Actually, every time we say that, it's not really true
at all. Yeah, but this time it is. Trust us.
But the DMs were flooding. People were tagging us in it. Everybody, I think I downplayed the Eclipse a little bit because I was like, it's an Eclipse, right? But everybody was down for it. Everybody was watching it. Everybody was watching it with groups of families and friends. We took a little peek at her ourselves when we were at the office, and you know what? It was enjoyable.
Now, I will say this. The rumors are true. You should not look directly at the eclipse. I made that mistake. I had the glasses on. You could see the moon crossing the sun. I said, well, I wonder what it looks like without the glasses on. Burnt my retina. Yeah. Still recovering.
Yeah, you got issues right now?
Yeah. It's just a little bit foggy, but it's no big deal.
No problem.
It should be all right.
Yeah, I'm not gonna lie. I by accident looked at it twice, and I'm like, "What am I doing?" Like,
twice.
It's just your day to day. I'm used to just staring at the sun all day, so it was. But
fool me once, shame on me.
Fool me twice, fool me again.
You nailed it. Yeah.
But the glasses worked fantastic, and it was so enjoyable, and it was so enjoyable to see. How much people really appreciated the stuff that we sent them. So if you're not on our mail out list, just send us a DM. Although they're flooded, send us a DM, and we'd love to add you to our database.
There's really no reason not to be in it. You get free stuff and great information. So
yeah, absolutely. We just love providing value, and our databases and our mail outs is just one small way that we get to do that. Now, Scotty, it's Masters Week. You a golf guy?
Not the biggest fan, but also not the smallest fan.
Oh, well, just the range, a little bit. Cut the difference.
Yeah, exactly.
What's your handicap?
What did you just call me?
Yeah, your short game, right?
Right.
Masters Week, one of my most favorite weeks of the whole year, and we've got the original, just a little revamp on the original Masters shirt that we've done. So in the front, a tradition of service unlike any other. That just speaks for that's who we are. And then in the back, of course, our AWFU logo with the ode to the Masters script. And you'll notice the logo here. The Masters logo is actually the map of America. This is the map of Essex County. So it's those little touches that we always like to do. Now, we've got a limited run of these. Of course, they are free. We've only got size large and XL. So if you want one of these shirts, we're going to throw you into a draw. Just comment whether you see this on Instagram or YouTube with your size, either L or XL, and we will throw you in a giveaway. And again, always free, baby. And okay, business time.
Let's get down to it.
Interest rate announcement. Let's start with that. So,
Yeah.
hot off the press. They're holding the rates. Scott, break it down.
Yeah, no surprise to me. I think, like we talked about in our last episode, it is way too early to cut. The fire is already kind of sparked here. It's a little bit of fuel on that. With rate cuts would be turning into a raging fire, which we don't want for the housing market. The reason they held rates and didn't cut them is because CPI inflation was actually higher than expected. The same held true in the U.S. as well. So inflation is not under control. And we don't want a repeat of what happened in the 70s when they cut rates too early, reignited inflation, and just led to all kinds of problems. So too early to cut. Inflation is not under control at all. But the market is still strong right now from the housing perspective because we just don't have enough supply. So I expect it to just kind of remain a stable market for the foreseeable future.
Yeah, and our local market right now really feels like it's week to week.
It's a good way of putting it.
February was extremely busier than we were used to. March still busy, but just it's hit or miss, right? It's very listing specific and buyer specifics. But the sales that we have in March, we had 440 sales on the residential side in Windsor, Essex in March compared to 335 in February. So sales were up quite a bit. But the interesting part is that the average sale price for the month was actually down. And I think I mentioned this in our market update for February, is that we had a lot of houses that sold, well over $1 million. And I think that skewed the numbers a little bit. April is what I'm really interested to see if we'll probably land somewhere in between those two. But, some houses out there, they're getting the 15, 16, 17, 18, 19, 20 offers, and some aren't. So it's a weird spot right now, and it really feels week to week, if I'm being honest.
Hit and miss is definitely the way to describe it.
So, again, 440 sales for the month. Out of those 440 sales, the houses that sold under 550,000, we had 242 of those, and 198 houses sold over 550,000. Not my favorite stat. I'd like to see that kind of on another level. I want to see what's selling above 750, and then I want to see what's selling above $1 million. If and when interest rates do come down, we will definitely see that number that's selling over 550 go up quite a bit, because of course the buying power for the buyers is going to be a lot more, right? A lot more. Now, so again, sales were up. Our average annual sale price is $562,000, which kind of puts us around the same that we were last May, right? And that's on the annual. Last month it was $557. Now it's $562. So the average annual sale price is rising, but the monthly sale price was $563,000 on average, compared to last month, 576. So we did drop on the average sale price.
So we have a slight year-over-year increase, but a slight month-over-month decrease, which is very interesting. Like you said, that could be skewed by a few big, heavy sales over the $1 million range, can really push that average sale price up. Or if we don't get those, it pushes it down. So can't draw too many conclusions from that. But I think what I'm seeing there is like a sense of stability, right? There's no big swings either way, whereas before it was big swings up, and then when they started raising rates, it was big swings down.
Yep.
And now we're in this stable market, which is another reason why I don't think they should do anything with rates.
Right.
We don't need anything. we want a stable market in the end. So, cool. Any other touching on the market stats?
Yeah, and at the end of the day, I think you hit the nail right on the head there. It's a stable market is what we all want. That's a very healthy market. It's not a buyer's market. It's not a seller's market. It's stable and it's healthy. Average list to sales ratio for the year, annually. So about 49% of the houses do sell. And for the monthly, last month, 50%. So monthly and yearly sales to list ratio, about half the houses that are coming to market are selling. Although if you're in the market, that's going to feel a lot higher. But there's a lot of properties out there that they could be overpriced. They're in different areas, and they just simply don't sell the first time around.
Yeah.
Right. But
Yeah.
that's always
Very
an interesting
property
stat.
specific.
Yeah. Residential listings. So this stat here, very, very interesting. We had 929 residential listings on market in March. Okay. Compared to 737 and 722 in January and February, respectfully. Inventory's coming. That's what that tells us.
Tis the season. Yep.
The inventory is rising, and that's great news for buyers. What does that mean for sellers, though? For sellers, that means when the inventory is rising, you got to stand out. Okay, you got to stand out with how you present yourself to market, and you got to stand out with price being priced correctly.
Yep.
Right. Any property right now, at the end of the day, if it is priced correctly, there's enough buyers out there, depending on let's call it $1 million and under. There's definitely enough buyers out there to purchase the property. So always starts with pricing, combine that with presentation, and then combine that with negotiation. You'll be just fine on the market right now.
You're not going to be the only game in town coming up as we head into the summer, especially that's when the inventory comes online. So you got to stand out, like Paul said. You do that with staging, marketing, great photos, great negotiating, and the proper price.
Yeah, and one thing sellers always forget right now, that the average days on market right now is 29 in March. So again, that's skewed by a lot of these properties that kind of sit there and don't sell. 50% of them. Mm-hmm. If you're priced correctly and you're marketed correctly and you're promoted correctly, you will sell.
Agreed.
You will sell.
Yep.
And that's always been the case. And that will happen in every market, actually. Even in a down market, if you're priced accordingly to the sandbox that you're playing in, your property will still sell.
Agreed.
Right?
Yep.
Last but not least, on the market stats update, a real big uptick on condo sales, right? Condo sales, let's go back to September. So September, we had 56 condo sales, October 57, November 57, December 39, little market pause, right? Merry Christmas. And then January 59, February 58, March 83.
Yeah, much higher than the previous months for sure. I don't know if you can make any attributions to that. Any thoughts on why that might be?
Absolutely none.
Yeah.
I have no idea.
Yeah. Well, I have some thoughts.
Go.
I think the only way to get into something new, sub 500K, is to get into a new construction condo. And that's a lot of the inventory right now is built in the past 2-3 years or even this year. So that's, I think, the big reason. And then you also have a lot of out-of-town people moving here. They don't know the locations. One of the best ways to enter into a market, if you're not from the area, is to start off with a condo and kind of learn the city and then take it from there. So those are some factors that I think might be at play here. I think the big one, though, is the newer properties. A lot of people don't want to buy a 60, 70-year-old property with all the potential headaches. They want the new, modern, open concept stuff. Sub 500K, condos your only bet.
Yeah, and we did have a lot of product close in the past. So in the first quarter, we'll call it, and a lot of those people were investors that did close on those, and they resold them,
point.
and they resold them when they closed, right?
Very good point.
Speaking of condos, though, the leasing on them right now is going very, very well.
Yep.
Very, very well.
You got the battery plant, you got the people flooding into the market for temporary or, relatively long-term, 1, 2, 3 years, looking to get a lease. We're short inventory. Rental market's pretty crazy, and they are leasing up rather quickly. I've got some clients looking myself, and it ends up being pretty competitive. There is a lot of supply that's coming online and continuing to come online, so that's kind of keeping it balanced in terms of new construction condos, but it is competitive out there, and rents are pretty high.
Rents are pretty high. So, and just a little note out there, people are actually looking for, and Tori, a property manager that we use, she's furnishing these condos. She's furnishing them. It takes her maybe 2 weeks at the most. Rents are a lot higher. If it's by the battery plant, they want them furnished. They will pay close to $3,000. They want it all in. They just want to pay what it costs every month. You include the utilities and everything else and all that. Furnished, all brand new stuff, and those are leasing really, really easy.
Yeah, as much supply as there is coming to market, not a lot of supply for furnished rentals. I would say I rarely see them. So if you have a furnished product, if you have somebody that's coming down to fit pipes for 6 months, they're not going to sign a year lease. They need something temporarily. They're willing to pay a little bit more. They need it furnished. And that's why that little niche market is existing. So if you have something, if you're sitting on something, you want to shoot for a little bit higher income, contact us. We can put you in touch with the right people as well.
Yeah, and if you got a property that you're thinking about leasing, give us a shout, because we've got a pretty good system for that now and can explore those options for you. Is this one going to be worth furnishing, or is this one just simply going to be as is, empty, and they bring
Yeah, we can give
in?
you some guidance there. And also on tenant selection, you do not want to get burned with a bad tenant in Ontario. You will not be able to get rid of them. You will not be able to recoup your rent if you miss some rent payments. So if you're not versed in screening tenants and selecting tenants and the lease process, if you're looking for help, we do a lot of that here as well.
Yeah, a little tenant pro tip for you when you're interviewing tenants or prospective tenants. Give them a little walk back to their car. See how their car presents on the inside. If there's garbage everywhere and all of that, that's how your condo is going to look. So they take care of their car, they'll take care of their house, and that's usually how that goes. A little pro tip. That one there's for free. So speaking of people coming in and population and Windsor and all that, Scott, break down a couple things here. One being the April 16th announcement with extended amortizations, and that will take us into some other stuff.
Yeah, for sure. So the federal government has announced some mortgage news. No further details on that for April 16th. So we definitely got to pay attention to what that is. Rumor has it they're going to increase CMHC mortgage amortizations, which right now cap out at 25 years, that they're going to extend them to 30, potentially 35 or 40. We don't know. We don't know. They didn't really give any information. So the people think, well, why do people even get CMHC insured mortgages, right? You have to pay like a penalty, right? It can be 15, 20, 25K that they add on to the mortgage. And it's important to note that real estate in Canada is very expensive. So these down payments in cities like Toronto and Vancouver, you're talking $200,000-$300,000 average down payment. To save that kind of money for the average person it would take decades. So a lot of them turn to CMHC insured mortgages, allowing you to put 5% down, 10%, 15%, but a minimum of 5%, right? So that opens up the door to home purchasing. Now, if I can extend my amortization from 25 to 30 years, it improves my affordability. So if I'm only approved for $500K, but now we're extending amortizations to 30 years, well, maybe that bumps it up to $550 or $600.
And now, correct me if I'm wrong, if we're extending amortization to that 30, 35, 40, whatever it is, that's going to bring back the investors too, because we're going to start cash flowing a little bit better here as well.
100%. No? Now, that's, from what I understand, it might only be for CMHC insured mortgages, which means you're not putting 20% down. Yep. Investment property, you need 20%. But they might do some announcements for conventional mortgages as well. We don't know. In the U.S., they have 30, 40-year fixed mortgages.
Yeah, and that's
right.
U.S. is so different.
It's very different market.
If you locked in on a 2.5% mortgage rate, like that's it for that 30, 40 years. Like that's your mortgage
5-year
rate.
terms.
That's
all that stuff.
That's insane. So I would imagine over there that that may affect sales too, because no one's going to leave, because if they sell, they don't want to get out of that term.
Yeah.
Would that be the case?
Well, that's also why interest rates over there are not having the impact that they're having here.
Yeah.
We're on 5-year terms here, so a lot of people are coming up for renewal. I think 60% of the market in the U.S. is either paid off mortgage or locked in for a much lower rate. So, yeah, very different markets. So that's something to watch out for. We'll have more news on that April 16th. I expect it, if they do announce it, it'll have a slight boost to the market. Nothing too crazy, nothing like 2021, 2022. Right. Now, in terms of Windsor's population growth, we keep touching on this. This quarter, so from January till now, Windsor's population has grown by 3,400 people. Wow. It doesn't sound like a lot, right? It doesn't when you hear that. But if you break it down, the average house size or number of people per household in Ontario is 2.9 people. If you divide 3,400 people by 2.9, that means you need 1,172 households built to house this new population growth. Guess how many housing starts we've had in Windsor in the first quarter of 2024?
I'm gonna take a guess that it's nowhere close to that.
Not even close. 1/5. So we're at 221 starts for the first quarter of 2024.
The first quarter, okay.
Okay. So as you can see, the supply-demand imbalance is getting worse, right? It's not getting better. And the continued influx of people from more expensive cities, that's just a secular trend that I don't see it disappearing for another decade. Numerous calls. I'm working with a couple people right now. Somebody contacted me the other day and said, hey, I'm either moving to Windsor or Calgary. They're in the GTA. They got a $500,000 budget. If we can't find them what they want here, they're going to go to Calgary. So it's the old drive or fly until you qualify.
And now Calgary, one of the most the Calgary's had great gains over there the past year. It's probably the hottest market.
It's been the most stable
Canada, no?
and the hottest market. Yes, because they were even below Windsor's average sale price.
And in Calgary, it's a little bit more better for the investor too, right? There's no HST there. What are some other benefits of Calgary?
Lower closing costs, and of course, you don't have the landlord-tenant board breathing down your neck like we do in Ontario, right? If you have a non-paying tenant, much easier to get them out. They also don't have rent controls, so a much more investor-friendly environment. Also, strong fundamentals. That's a metropolis. That's a million population plus city. They're diversifying the economy away from simply oil and gas. They've got big tech companies going there now. So it's Calgary's been bucking the trend for Canada and Ontario specifically, which we've been kind of heading lower. They've been heading higher. I've got a couple properties out there. That's why I've been paying attention.
And how are those properties performing?
I mean, I expected the price to come down. They're pre-construction. They're coming to completion this month. Mm-hmm. And I was like, oh, I wonder what they're going to be. And they're up about $100K from when I started the process. So purchase price of $420, and they're selling right now for about $525. So that goes to show you over the past 2 years what's happened with their market. Well, we've trended low. If you bought pre-construction at that time in Windsor, you're underwater, right? Whether it's a condo or a townhouse or whatever.
Yep.
So
you're definitely paying into it too. You're not cash flowing on pre-con here. That was bought 2 years ago. Although the cost of what you paid for it at that time is probably right around the same. It hasn't gained, and some may have lost depending on the unit, but it's kind of stayed even keel.
Yeah,
and
we've gotten back to even.
Yeah, and pre-construction in Ontario there's just so many costs associated with it. It's hard to it's hard to make money, especially in Windsor. Toronto may be a little bit different, but in Windsor it's a little bit tough.
Yeah. So in sum, we fell short by 5x the housing starts needed to house the population just in this quarter. Mm-hmm. I would expect our population to continue this trend throughout the year, which means we might grow by 10,000 this year. Yep. And last year we built 953 homes. Yep. So if you're a builder right now and interest rates are at this height and your resale prices are muted significantly because the buying power isn't there, you're not rushing out to build right now. So I don't expect building starts to catch up anytime soon. So we're going to be in this kind of quicksand situation for maybe years and years and years to come.
And even if the rates do come down, there's still all that red tape that comes along with trying to build and the cost, right?
Development costs.
What's the percentage of cost on a new construction home that goes to the government, right?
It can be 20-25%. It's
crazy.
And everybody blames the developers, everybody blames the investors that are putting all this risk in there, but they never seem to look at the government's exorbitant costs and red tape as the main culprit, because that's what it is in my opinion. So
yeah, a lot of good info there. Again, this is always my favorite episodes is when our monthly market stats get released. If you see us standing up, it's business time, and market stats is business time. If you need any other insight to the market on the buy, sell, investor side, whatever you need, as always, we're so grateful when you reach out, and always an honor to work for you. Any last words, Scotty?
No, just you got a link for these amazing stylish
link will be in the YouTube, and shout out again to Woody's Hoodies. So proud to support this initiative. Keep crushing it, and my friends, if you need anything,